Krishna, what's your view on the market overall? Do you see a pullback now through the months of September and October, or do you think we are okay?
I think last week what we saw was the first signs of the markets are due for a decent correction, and maybe today the markets have recovered, but we are circumspect on the market at the current valuations, and we believe that the month of September should be a very volatile month with some price cuts, and 5 to 7% kind of a correction during the course of this month should not be surprising.
Has the domestic liquidity situation improved any, Krishna? I mean, in dribs and drabs, we're beginning to see some buying from the DIIs again.
I don't think so. I mean, yeah, there could be some buying from domestic mutual funds or insurance companies. Traditionally, the second half of the calendar year, financial year should be strong for insurance companies, and we should possibly see large buying coming from them in the second half of the year. But if you talk about mutual funds, based on our interactions, etc., we feel that the inflows, outflows are kind of matched, and you see on a daily basis, yes, they have been generally been net sellers in the markets, and this has not been for this month, but for months now. So at least I don't see any great participation or increasing or inflow at least in their domestic MFs.
This conference would have given you a sense of where most people are betting on in terms of market direction, though, Krishna. What's the general consensus? That it will remain range-bound by the time we wind up this year, or that there is a gentle drift up, even if it's gentle?
I think the way fund managers are looking at it, that it's more a bottoms-up market today than a top-down sectoral approach. And in terms of indices, everybody is kind of on a view that it's in a consolidation phase, and indices may not move up sharply. But in terms of stock opportunities, I think everybody is gung-ho and looking at various stocks on a bottoms-up basis. But having said that, fund managers are very clear about the quality of management that they want to back, and in their endeavor to find higher returns, they are not willing to compromise on the quality of the management and the quality of the stocks that they want to back. So I think to that extent, every year we see the maturity levels of investors improving substantially, and so it's a bottoms-up approach as of now.
You would have extensive coverage fairly of the mid-cap pharmaceutical space, Krishna, leading up to the conference. Which are the names that you are backing at Emkay?
I mean, amongst the mid-caps that we believe can make the cut to the next level would be Torrent Pharma and Aurobindo Pharma. They are large companies, and as far as Aurobindo was concerned, the key concern over there was about its balance sheet. Now it's been improved to a substantial extent, and in terms of the business transformation itself, from being a predominantly API player to now being a predominantly formulations player, and also its tie-up with Pfizer. So that's one stock which is quoting at 40-50% discount to similar sized opportunities in the pharma space, and we believe that this stock can give very good returns to investors over the next 2 years time frame. Similarly, Torrent Pharma, no doubt it has done well in the last 12 to 18 months, but the kind of visibility that it has in terms of its earnings for the next 2-3 years and the valuations at which it is growing, at which it is quoting, we believe that this is one more stock which can give very good returns to investors. In CRAMS space, we like Jubilant Organisys. Now that's one stock which has, in terms of the top line growth, it has been doing very well, but there were concerns on its balance sheet, and they have reduced their debt substantially, by raising some equity in a QIP 6 months ago. And based on our understanding in terms of the growth profile of the company in the next 1 year's time, the debt equity should come off to below 1 or rather 0.8. I think that's one stock at current valuations which offers very good returns. So these are amongst the large mid-cap companies that we are recommending to our investors in the pharma space.
You seem to like Cadila as well in that space, Krishna?
Yeah, that's one stock that we have been aggressively recommending for the last 12 to 18 months. For the size of the company, I think It's almost a $2 billion plus market cap company, but the kind of valuations discount that it quotes to its peers, I mean, it's quoting at around 15 times the earnings FY12, and we believe that it should be at least quoting at 17, 18 times at par with its peers. So that's one stock among the large caps which we believe can give you at least 20-25% returns over the next 12 to 14 months.
Glenmark went through an extremely painful period of adjustment, Krishna, for its investors as well. Is the worst behind it, you feel?
I think at the current prices, the generics business of it is discounted, but the R&D pipeline doesn't seem to be discounted after their initial two failures in their R&D new chemical entities this time. But after the Sanofi deal, if there are any positives, so that part of the business is not yet discounted, and if we see some positive developments on their NCE part of the business, that's the potential upside in the stock. Otherwise, at current prices, it's fairly valued.
It's got a lot of representation in the market, Krishna, but it's not a leadership sector, pharmaceuticals. If you had to pick out leadership sectors for this market, what would they be, the 2 or 3 top ones?
I think if you look at the weightages in the indices itself, the large cap indices, banking sector is the leadership sector with more than 20% plus weightage, and that's been doing very well, and it will continue to do very well. Pharmaceuticals, I mean, in terms of the sheer size of the sector, it's an important sector, but no doubt it doesn't attract the same kind of capital investments that whether an oil and gas or banking sector will attract. So banking is one sector which we have been very bullish on, and we believe that will continue to do well going forward.
If you are playing for a 5 to 7% kind of correction, Krishna, what do you think will be the leader of that correction?
I think the immediate run is out. By the banks itself has been very sharp and very high, and so for no rhyme, I mean, just because there's money taken off the table, so you could see some corrections in the banking sector itself from an immediate perspective, but from a longer term perspective, we are bullish on that sector.
And just a quick word before we wind up on any of the large cap pharmaceutical names in the index that you would want to look at now between Ranbaxy, Sun, Cipla, etc. Dr. Reddy's?
I think Dr. Reddy's and Cipla are the two stocks that we have been recommending to our investors from an investment perspective. Among the MNCs, I think Glaxo and Pfizer look interesting. These are the 4 stocks that we have been recommending amongst the large cap pharmaceuticals, which can give investors decent return. But these are well discovered stories and quoting at fair valuations or rather decent premium to the Sensex valuation. So these are more stocks for large fund houses, and from an individual or other retail investors' perspective, maybe they may not attract substantial interest.
Thanks for joining in today, Krishna. Good luck with your conference. That's Emkay with its pharmaceutical conference that starts off today. Markets